How's it going, everybody? Welcome back to another video. And in this video, I'm going to be doing a trade recap. It's been a while since I've done one. Wanted to get some face time. And this recap is going to be on how I took a decent amount of trades on Friday, April 23rd, and I got a little chopped up on Tesla and I gave some money back. Yes, I lose money. Everybody loses money. Welcome to trading. It's hard to be perfect. Those red days are just a cost of doing business. The thing that I always try to do my best at is making sure that those red days never get too out of control. Because as a scalper and somebody who's taking advantage of those very quick moves, sometimes it's easy to get caught and have things go against you pretty quick. So as long as I don't let that get too big overall because of my higher win rate and just what I have figured out works best for me, at the end of the month, I should be okay. And what I've noticed after a while, and especially from a scalping perspective, there are a lot of flat days, kind of days that aren't very exciting, maybe small green, maybe small red, but a lot of times where a lot of my P&L comes from is the handful of days each month where there are a lot of opportunities. I take advantage of them, and then the winners are a lot bigger, and that's where sometimes you see my videos making 2,000 or 3,000 in a day. It only takes a few of those to be able to make a nice month. And that's why it's so important for myself to not get into too much trouble on the days in between that aren't very exciting and the price action just isn't that active and there's not a whole lot going on. Because when I get chopped up on the days that are a little bit more boring, that's where I can have those huge losers. So I'm going to do a bit of a top-down approach, go over the technicals of the SPY and the QQQ, what they were doing that day. Then I'm going to go over the technicals in a Tesla chart. I'm going to show the entry and the exit of each trade and then show the executions. Okay, so now to get into the good stuff, let's get into the technicals of what the SPY and the QQQs were doing on Friday. So as you can see, here is a daily chart of the SPY. Very nice move higher. It's been in a nice trend. Little bit of consolidation up here because obviously stocks can't go up forever. So it pulled back to the 9 EMA, had a couple days of misdirection. So I have no idea which way this is going to go, but it is nice and strong and it's a nice trend. So I use those basic levels. Prior day's high, 416.78. And prior day's low, 411.12, knowing that it is close to all-time highs, 417.91, and then also knowing that it's trading right near the 9 EMA. So those are the levels that I was looking at on SPY. And now looking at the Qs, so been in a very nice uptrend, a little bit of consolidation, hanging right around the 9 EMA, keeping the levels simple like always. Prior day's high, 339.90, prior day's low, 334.01. Also knowing that all-time highs are just above at 342.23. So those were the levels that I was looking at on the Qs. Now to get into Tesla. Had a nice green candle on the 21st, gave some of it back on the 22nd. It is trading above a lot of the short-term moving averages, so just knowing that. So the levels that I was looking at was prior day's low, 1704, prior day's high, 753.77, pre-market high at 728, and pre-market low at 712.53. And that was just about waiting for the open, see which way the market goes as a whole. What is SPY doing? What is Qs doing? Does Tesla get to any one of these levels and create some of the patterns that I like and always talk about, which is the opening range break? And lately, the pattern that I really like to trade is the flag pattern. Okay, so now to go over all the trades. I ended up taking 7 trades today, which is crazy. And funny enough, when I always talk about trying to do a little less, trade a little less, I'm really good at right around that 1 to maybe 5 trades max. And of course, the one day this week where I traded over 5, I happened to lose money. So that just goes to show what I always preach and talk about, that when I'm trading more and I'm pretty active, I can screw up. But going into the first trade, so what happened? Off the open, Tesla was a little crazy, happened to sell off. It did break prior day's low, but not very clean price action, and I wanted to just give it a handful of minutes. I like to wait a little bit longer off the open when I can, and especially when the price action is whipping around. So took a dip off the open, reclaimed the short-term moving averages, got back above VWAP, did have a very strong upside move. Even though there was opportunity here, I just was trying to relax and just wait. So had the big move, pulled back, held VWAP, held the moving averages, and this is where I took the first trade. So I ended up taking it long for the high of day break. This is where I went wrong. Look at how many green candles in a row I chased. 1, 2, 3, 4. No clean flag pattern. It just got to high of day really fast. So this is a good example of just chasing strength. And I've noticed all the time that my losses come from when I'm chasing a lot of green candles in a row. Yes, sometimes it has follow through, but when it doesn't, this is exactly what happens. So I got in, it didn't go pretty quick, and this next 1 minute candle yanked so aggressively. I was only in this trade for about a minute, but this candle got me pretty good, and I ended up getting out right towards the low and taking a decent sized loss. And this can be the downside with trading Tesla. Yes, when you're on the right side, it feels great and the wins can be big. But even though this is not normal, sometimes Tesla has wild movements and it's easy to get caught in it. Normally these yanks are not that big, but this is just on a Friday, a little bit of crazy action. I got caught in a 1 minute candle that was almost 5 points. And especially trading options on a Friday, that just wrecked them. So that loss was pretty big and I just had to deal with it and accept it. So getting into the second trade, so what did it do? Pulled in, held VWAP, held the short-term moving averages, got back to high of day, and this is once again not very clean. I gave it a chance, went long on the break, it went in my favor, kind of started to hesitate, and then when it pulled back in, I got out of this for a flat trade. Now getting into the third trade, which I think was the best trade of the day. And why was it the best trade of the day? Because it was a clean pattern and it was also close to a technical level. So pre-market high was 728. The difference between this setup versus the others is a nice tight period of consolidation. Above the 9 EMA, this is now looking like a very clean flag pattern. The pattern that I always talk about that I like to trade, this is setting up. The high of that flag is 727.72. So knowing that if it gets close to that and it can break it, also knowing that pre-market high is above, I think that there should be some momentum there. And that's exactly what happened. So I ended up getting long right around 727.30s, 40s, anticipating the break just a little bit. And then on the next candle, that's exactly what it did. So it broke that flag high. It also got right through pre-market high. And that is a very nice move. Started to speed up in my favor. Tape started to really go quick. And then I just got out for a very nice profit. So that is the setup that I need to look for every single day. If I was just patient and I let a lot of this happen and go by and said, let me focus on waiting for the cleanest flag pattern possible, this would have been my first trade of the day. And to be honest, that's a very nice move. It wasn't a huge win, but it's a nice clean trade. I probably would have been able to do a one and done approach and would have been green on the day. But we all know it's hard to be perfect. And I think the first trade being pretty red for me off the open kind of sparked a lot of old habits of over trading and even getting caught in some things and holding them a little longer. So unfortunately, it was just one of those days. I'm glad that it didn't turn into an absolute disaster. And then the fourth trade, so Tesla had a very nice move through pre-market high, started to consolidate above that level. Handful of minutes of consolidation. I went for the high day break, got a pretty quick move, and then the moment that it started to reverse, I got out. So even though this wasn't necessarily the cleanest setup, and the farther away I noticed Tesla gets from VWAP, the less follow through those flag patterns have, but I still wanted to give it a chance, and I did a really good job at when it went in my favor and it started to reverse, I just cut the trade for flat. And now getting into trades 5 and 6, so just way too many trades today. This kind of eventually did its thing, pulled in a little bit, had a very nice move over high of day. Here is trade 5. This is not even a clean setup. I just saw the big move, pulled back a little bit to the 9, and then I just chased a wick. I didn't even wait for a clean flag pattern. I didn't wait for this candle to close. This just wicked up, and I assumed because it was strong, it has a chance to keep going. I ended up getting long, and it instantly pulled back on me, and then I ended up getting out a couple minutes later for a small loss. And even though that's not a clean setup, I can't be too upset about that because I did give it a chance, but I think I did do an okay job at getting out quick. Here is where it started to get bad. I took the 6th trade right here. There was no setup here at all. I just saw it get back above the 9 EMA, chased a wick again, assuming that it had a chance to make a new high of day, and then it pulled back pretty aggressively, and I did not get out of this as quick as I could have. I held for a few more minutes, and I ended up getting out right around 729-ish, so just being a little too patient, and this is the one where the loss was a decent size. So after those 6 trades, I was down a decent amount on the day, and I probably should have just walked away. Realized I'm not able to get it going, and at some point, I've got to just step in front of myself and say it's one of those days. It happens every now and then. Just stop trading. Now, I did take one more trade. I made money on it, but I made money on it the wrong way. So getting into my 7th and final trade, which is just way too many trades, I ended up chasing this big green candle right here for the high day break. So entries are everything, and I had extremely poor entries on some of my trades, which was the difference. So I ended up getting long on this big green candle and did exactly what I don't like doing, which is I held it for way too long. So chased the high of that candle. It did end up pulling back, hanging around the 9 EMA, and then eventually got going again. This big, huge green candle took out the high of day, and the moment that it started to move fast and in my favor, I just got out of the trade, and I happened to get a nice winner on this, but I did it the wrong way. And after that, I called it a day. I realized that I was very close to having more of a minus $2,000, $3,000, $4,000 day. So when I looked at minus 696, I gladly accepted that. And it is what it is. It happens. I'm far from perfect. There is no such thing as a perfect trader. These days happen. Just trying to not let them get too out of control is the most important thing. After a day like this, I just try my absolute best to learn from it. And that's it. So that was the recap of my sloppy trading day and how I got chopped up trading Tesla. Appreciate you watching the video, and I'll see you in the next one.